Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards, with your host, Mel Blackmore.
If you're listening to this podcast, then you're in great company. We've got thousands of listeners who have a thirst for continuous improvement and raising standards in business. Whether your interest is in quality, sustainability, or risk standards, I'd love to welcome you as a member to our online platform for all things ISO, the ISology Hub. The ISology Hub is the leading place to get access to all of your online resources, from in-depth training courses through to our very popular coffee break training, to templates and action plans and many other resources to help raise standards. As a member, you get access to over 100 courses, taking you from learner to practitioner to leader. The ISology Hub has all the resources that you need, which will really help to make your life easier and to help improve compliance in those business critical areas. So if you'd like access to learning and compliance resources ranging from data privacy to environmental management, anti-bribery, business continuity, quality, health and safety, to name just but a few, the list is endless actually, then we'd love for you to come and join us. Just head over to the isologyhub.com. In the world of climate action, transparency is key, and that's where the Corporate Sustainability Due Diligence Directive comes in. Today on the ISO Show, I'm going to be giving an overview and insights into the CSDDD, a landmark piece of EU legislation that's designed to ensure that companies are taking their environmental and social responsibilities seriously. So in this episode, you'll learn what the CSDDD is, what its purpose is, what the key requirements are, and also what the emissions reporting requirements are and how this links with CSRD. So apologies for all the acronyms, but it's going to be a much quicker podcast if I use the acronyms rather than the full names for them. If you're wondering what the CSRD is, that's because you haven't tuned into the previous episode. So I'd recommend that you go back and listen to that, because there is a crossover with the CSDDD, and which I'll come on to and explain about that in a moment. And then finally, I'm just going to cover off briefly what I think the possible impact of the CSDDD will be. Okay, so in terms of the CSDDD, the Corporate Sustainability Due Diligence Directive, and that's the last time I'm going to say it in full because it is a bit of a mouthful. It's a new EU directive that promotes sustainable and responsible corporate behaviour in companies' operations and across their global value chains. So yes, it does affect all organisations' value chains that are eligible for CSDDD, and I'll come on to explain about the eligibility criteria shortly, because not all businesses will be eligible. So the CSDDD was adopted by the European Commission back in 2022, and it's only just been approved this year on the 24th of May 2024 by the Council of the European Union. So the new rules ensure that companies in scope identify and address adverse human rights and environmental impacts of their actions both inside and outside of Europe. And the CSDDD isn't happening right now, but obviously we're recording this to give you a heads up on it because it is coming down the old disclosure food chain. But it is expected to start affecting companies from 2027. So 2027 at the earliest. So that basically means that once the directive has been transposed into national legislation, and again, some countries will be transposing the EU directive into national legislation quicker than others. So it's just one to be aware of and just to keep abreast of, really. So what are the key requirements of this new directive? Well, there are basically 3 key areas. Human rights due diligence. So that's all about companies identifying, preventing and mitigating adverse human rights impacts within their value chains. The second requirement is all about environmental due diligence. So we've covered environmental management systems a lot on this podcast over the last few years. But this is all about how you assess and manage risks related to climate change and biodiversity, loss and pollution. And then finally, last but not least, there is a very strong emphasis on disclosure obligations, which is obviously why we're bringing this to your attention now under these ESG reporting requirements. So, under the disclosure obligations, companies must disclose their due diligence processes, findings, and any remedial actions taken. So, how does this relate to greenhouse gas emissions, which is obviously what we've covered quite a lot on the podcast in the past? Well, this directive requires companies to report on their greenhouse gas emissions within a climate transition plan. So many organisations have got a strategy or they've made a pledge towards net zero, and some organisations will have a climate transition plan. So this should include scope 1, 2 and 3 emissions. And I won't go into detail on those now, but if you go back to the previous episode on CSRD, I do give a brief overview there. And we have covered previous episodes specifically on reporting on your greenhouse gas emissions, how you calculate and quantify your greenhouse gas emissions so that you can report on them and produce carbon reduction plans and transition plans. So I'd strongly recommend going back and listening to those podcasts if you'd like further information. So you may recall in the last episode, I highlighted the requirements of the CSRD, the Corporate Sustainability Reporting Disclosure EU Directive. So where does this new one fit in with the CSRD? Well, you might be thinking it's another layer of reporting, another layer of bureaucracy, but actually you don't have to do this twice. So what I'm saying is that companies within scope of both the CSRD and the CSDDD will not need to double report on greenhouse gas emissions. So I'll just say that again. Those companies within the scope of CSRD and CSDDD will not need to double report on greenhouse gas emissions. So that's good news for organisations. But one thing I need to highlight is that the CSRD reporting also needs to adhere to the CSDDD's implementation requirements for the transition plan. So you just need to make sure that once the greenhouse gas emissions have been reported, that needs to be part of that transition plan, which falls within CSRD as well. Another topic that we've covered in great detail is on emissions verification. So there will be a more definitive guidance on verification requirements that is expected to be published closer to 2027, but companies are very likely to need to verify emissions data reported through the CSDDD because the directive mandates a climate transition plan that aligns with the CSRD, which does require companies to verify their emissions data. Okay, so what you can take away from that is that if you're eligible for CSRD, you also need to be able to verify your carbon footprint if you're compliant with CSDDD. So yeah, I know that this is quite a lot to take in, and apologies if you're driving or doing something and you're thinking, oh, I should be taking notes on all of this. Don't worry, there will be notes linked to whichever media player you're listening to. So we have got information highlighted on the show notes, but also Carbonology have created a course explaining about all these different reporting disclosures, which I'll mention about later on as well. So the important question is, does your organisation actually qualify for CSDDD? And you're probably listening to this thinking, well, I hope not, after all those acronyms that I've been spouting out, and yes, like an alphabet soup, isn't it, of various reporting disclosures. Well, at the moment, it's only applicable to large organisations, but this does apply to organisations both in the EU and non-EU companies as well. The main criteria is ultimately about the workforce size and the revenue. So whether it's an EU company or non-EU company, if that organisation has more than 1,000 employees and a global net turnover of at least €450 million in the last fiscal year, then it's going to be eligible. Or if it's an organisation that has franchising or licensing agreements in the EU in return for royalties with more than 22 million generated by royalties. So what's the possible impact of this new directive? Well, similarly to the other ESG disclosures I've covered over the last few weeks in the series, I think that ultimately the similarities are the same across all of these different ESG reporting requirements. And I think the first one is basically it's all about combating greenwashing. So it's about improving transparency. So all of these new disclosures are going to help to provide stakeholders with a very clear picture of a company's sustainability efforts to combat greenwashing. With that, it's also going to help to increase accountability as well. So companies are going to be held accountable now for their environmental and social performance, which I think has only got to be a good thing. I think shareholders, employees and other stakeholders crying out for complete transparency and accountability from organisations. And all of these disclosures that I'm talking about and that I've covered over the last month is all leading to that. And last but not least, I think all of these different ESG reporting disclosures will help to stimulate sustainable business practices. So ultimately encouraging companies to adopt a more sustainable practice and embed it within the day-to-day business operations so it becomes business as usual, including regular reporting. So that's the end of this series on understanding ESG reporting. I think you'll agree that this new wave of ESG reporting disclosures is only going to help to initiate and embed transparency, accountability and continuous improvement. To help navigate the complexities of all of these new reporting requirements, though, Carbonology, which is a leading independent verification body, have created an introductory course which covers various mandatory and voluntary reporting requirements. So if you'd like further information, just head over to www.carbonologyhub.com. Thank you so much for listening to me today, and I hope that you found the series that I've done on understanding ESG reporting helpful and informative. So if you did, please do leave a review. I'd really love to hear from you and to see how you think that you've learned something new, hopefully, over the last month where we've been covering these different reporting disclosures. And don't forget to hit subscribe so you don't miss any future episodes. Well, that's all from me today. Thanks very much for listening, and I look forward to catching up with you on the next ISO show.
Looking to use ISO standards to drive better business practice? Contact us at blackmoresuk.com to access further information and book your free 15-minute call.